Okay, so we're going to update the balance sheet for today, 2nd of July. Ideally, I guess you would want to do it for the last day of the month, but since it's not the last day of the month, we're just going to do it for today. So it's very easy, right? If you remember the first time we did it, how easy it is. The balance sheet is probably literally the easiest thing to do. It's just copying over the numbers, right? Okay. Okay. Cash, 376. I don't know if that's actually how much I have, but whatever. I need to add a new account here, which is as a cash account, a reimbursement expense account. These are the expenses I incur for work that are going to be repaid. So basically, I have that much money in that account. Right? Brokerage account, $0. So move over these formulas there. Okay. And yeah, as you can see, my net assets have gone down. And this amount, right, is taking into account a couple of expenses that I've already had in July, like paid rent, paid some groceries. I just went and got some eggs and bacon this morning, and already paid the health share costs. So, well, at least for the staging account, it's reflecting the rent and that expense being paid. Okay. All right. So now let's do the credit cards. 2783.16 0 78.44. Same as last time. 0. Nice, it's 0. See that? It's gone down to 0. All right, this one 12709.70, exactly the same. Chase Freedom Unlimited 785.12. Okay. Oh, this card is closed. I actually did not realize that. I figured, hey, I'm going to try using this card. I haven't used it in a while. Like, might as well so that it would stay open. But it's closed. It's closed, so we're just going to delete it from there. I already deleted it from the balance sheet. Discover Miles still has a $35 balance on it. I wonder what they're going to do with that. I don't know what's going to happen. It's just going to stay there in perpetuity. I guess I should use it. I guess I should use that because that's just money that's sitting there. All right, so my liabilities have gone down a little bit. So let's see what happened with the net worth here. My net worth got worse. Oh, you know why? Because of the 2 expenses that I've had in July already. So if I want to kind of like see what it was for the end of June, just for fun's sake, I would take this and I would add in my rent and the expense that I just paid, my health share expense. Okay, and there we go. We have a, at least for June, we have a positive change in the net worth. So I guess ideally we'd want to do the balance sheet at the very end of the month, but at the same time, the income statement is best done a couple of days after the end of the month because, it takes some time for the transactions to settle and for them to show up in your statement. Like if you make a credit card transaction at the very end of the month, it'll show up in your budget a few days later. So ideally, the income statement is best made a few days after, same with the cash flow statement, but the balance sheet is best made at the end of the month. Since it doesn't really matter, I'm just going to keep the balance sheet, the creation date of the balance sheet on whichever day that I make it. Okay, so next month on August 2nd or 3rd, when we make the balance sheet, then we can compare this net worth number to that one and see how that's changed. Cool. So that's it. That's it for the balance sheet, and that's it for the personal financial statements. Okay, we didn't really have to use this because we already made it, right? But just want to remind you of this, okay? They all work together here. The income statement is whether we made a profit or loss that particular month. Then the net income is things that we can use Like these dollars we can use, we can tell them where to go. They come in, we tell them where to go in terms of outflows. If we outflow our dollars to assets, then those assets help us later on by creating more income for us. If we outflow those dollars into liabilities, then those liabilities create more expenses for us and put greater strain on our net income. This is a really, really, really important concept to understand, and that's why people do not get wealthy. And that's why there's so much problem financially in the world, is because people don't get this. People think that, like, oh, the balance sheet, it all ends there. No, it doesn't. The balance sheet affects the income statement. It's so simple. I mean, when you lay it out in front of you like this, it's like a no-brainer. It makes all the common sense in the world. But if you don't think about it, or it never occurs to you, as it does most people, right? Then it doesn't make sense. It really doesn't make sense. And I'm going to talk about one example here real quick before we end the video. When people buy a house, okay, a house is probably one of the biggest purchases that anybody is ever going to make in their lifetime. They buy a primary residence to live in. People think that that primary residence is an asset on their balance sheet. Think about what happens when you buy a house in terms of cash flow, okay? You're taking on a lot of new debt because you're taking out a mortgage. That new debt that you got creates liabilities, all right? Because you got to pay the interest on the mortgage, you also got to pay the mortgage payment, right? So you created a liability. Have you really created an asset? A real, true, a good asset is something that is going to put money in your pocket. Your primary residence that you buy, you created a liability there, okay, but have you balanced it out with assets? Like month over month, is the house that you live in, is that going to provide you income? No, it's not. Okay, you might rent it out, Airbnb, or something like that, whatever. But if it's just you and your family living there, it's not going to produce you any income. It's not. So when you buy a house, what are you really getting? You're getting a liability. You're getting a liability. That's why so many people are house rich, and what is it called? House poor. Is it called house poor? I don't know. I don't know what it's called, but that's why so many people, like, their biggest asset on their balance sheet is their house. But it's only an asset in that there's a value here, right? The value of the property is listed, but it doesn't put any income into your pocket. So that's that. That's it for the balance sheet. That's pretty much wraps up this section, guys. Well, there's more to do, actually. There's more to do. I'm going to save that for the next video here because we're almost at the 10-minute mark. So I'm going to save it for the next video, but there is more to do. We'll take a sneak preview into what we're going to do, right? So we go back to this. This is like our control panel, right? This is so cool. I was estimating about 300, an extra 600 a month from, to be able to put into credit cards. Based on my income statement, I have a surplus of 480.81. Okay. So what I can do is decide what to do with this net income here, right? If we put this into the future a little bit, right? If we say that in July, let's just pretend something's happened. If the net income is about the same, the new debt is about the same or less, cashback, whatever, is 0, and debt payments are going to be about the same, investments are going to be about the same. Well, debt payments, we can't keep up this number for forever because eventually our assets are going to be depleted. So the cash flow statement, like the best thing for cash flow to be is as close to 0 as possible. So now we're going to try and optimize this. So for July, we're going to try and get net cash flow as close to 0 as we can. And it might take more than 1 month to do that, but we'll see what happens. Next video. I don't know. I think we should create the emergency fund. I think that's like the next pressing item for us to do. So, all right, guys, we'll see you there. Bye-bye now.